We want to welcome everybody to our latest Georgia Zone Facebook Live webinar, where we try and give you valuable information that's going to help you make very important decisions in your life. One of those is buying a house, which is what we're talking about today. I'm Adam Schick, glad to be with you, and I'm joined by Aaron Craig from Georgia Zone. Aaron, thank you for venturing down this path with us, and I know sharing a lot of really important information today. So before we get started, can you just tell us a little bit about your background and what puts you in the position to be the authority on this very important topic?
I don't know if I'm the authority or not, Adam, but
you are the authority.
I've been at Georgia Zone Credit Union for about 2.5 years now. I'm the director of mortgage sales there, and prior to that, I was at a previous credit union for about 12 years, and I was over the mortgage department there as well. But I've been doing mortgages ever since about 2003. So I've been doing them for a long, long while, and we have a great group of mortgage loan officers at Georgia Zone, ready and willing to help out. And yeah, they have some of them have a lot more experience than me even, but I'm happy to share what I know at least, and hopefully help some people in buying a home.
And of course, if you're watching this live right now and you have questions specific that we maybe don't cover, we encourage you to drop those in the comments below. And if you can get them in while we're here talking, we will certainly bring them up and get Aaron's expertise. If you're watching this after the fact and you're just seeing the recording of it, you can still put them in the comments below. And the Facebook master, Will Miller, will be sure to make sure that you get the answers to those questions and you have all the information that you need. Okay, so let's dive in, Aaron. And I should say, I feel like I'm in a good position to be the person asking these questions, because I'm doing this from my new townhouse that I bought less than a year ago. So I've recently asked a lot of these questions, and I've had is this a dumb question? Why don't I know this automatically? I've gone through all those things. So I feel like I can present that here today as a true voice of someone who wants this information and needs it. So let's start with a question that everybody should ask is, what do I do when I want to buy a house? I'm starting from, I've made the decision, I want to own a home. What happens next?
No, that's great. And first off, congratulations on your purchase, Adam. That's awesome.
Thank you.
Always great to get in a townhome or a home, and that's wonderful. So you could probably teach this better than I could at this point with all your fingers.
I wouldn't say that.
Step one, you can research all sorts of stuff online, so that you know a lot of the process before you even get started, and you know what to expect before you get started. Georgia's own website has lots of home buying information on there for you, so you can research some stuff, lots of tools for you to utilize. But step one would probably be just to find out kind of how much you can maybe afford, or what you think your budget can afford in looking to buy a house. And again, there's lots of bank calculators and things like that out there that will assist you in finding out how much you can afford on your home. But I would encourage you to call a loan officer or to apply online at georgiazone.org if you're ready to take that first step. And there's no upfront costs. It costs nothing to apply. There are some places that charge an application fee or that charge a credit report fee. We don't charge anything upfront before you're ready to move forward. So I would encourage you to just go online and go ahead and apply, and it'll kind of give you some of the tools to walk through, the steps to look at. And then as far as gathering information, go ahead up front and be ready with whatever information you're going to need, like last 2 years worth of taxes. If you're a W-2 wage earner, then we really just need the last 2 years of W-2s and recent pay stubs. Bank statements, if you don't bank with Georgia Zone, which obviously we do checking and savings and everything, and we can provide that if you're already banking with us. But if you're not, then the last 60 days worth of bank statements from your other institution. If you're self-employed, then we would need the full last 2 years worth of tax returns, including any 1099s, any K-1s in that. I'm just making sure I'm not forgetting anything. Valid ID, that would be good to have as well. And if you're just really ready to go shopping for a home, obviously you're not going to have a purchase agreement or a sales agreement yet. But again, that's step one, is really just apply, get pre-qualified, get ready to go and work with your loan officer to see how much you can afford, as well as what you're comfortable with, you personally, because just because you're pre-approved for 400 or 500,000, you might personally not be ready to make that big of a investment, that big of a step yet. So see what your budget is comfortable with after you get all the facts. Yeah.
So you said a couple of words there that I had to learn that I didn't know. and there's two of them. It was pre-qualified and then it was pre-approved. So I remember, and kind of where my journey started, which is probably where a lot of people's does, is that we have a lot of Zillow warriors these days, right? It's never been easier to look at houses, to see everything that pops up on the market, look at all the pictures, have all the information, which is all great and it's good to have as a baseline. But as I quickly learned from the realtor we were put in touch with, you can't realistically make an offer on anything until you are either pre-qualified or pre-approved. You can say you like a house, but no one selling a home is going to accept an offer until you have one of those two things. So can you talk about those processes? How are they different and what do they both mean?
Sure. Bottom line, pre-qualified and pre-approved, those terms are thrown around a lot, and there's not a hill of beans worth of difference between the two. It just differs on your lender. So depending on what the lender does, they might have a very specific definition of pre-qualified or pre-approved, but it's all pretty much the same thing. And if you go to the CFPB website, the Consumer Financial Protection Bureau, it says as much, okay? So it just depends on your lender. But bottom line, pre-qualified or pre-approved, we have looked at, or the lender has looked at a set of information given and said, based on this information, you are pre-approved or pre-qualified up to a certain amount to buy a house. So that helps you in the home buying process. When you make an offer on a home eventually, there's other people making offers on that home as well. And if you're not pre-qualified or pre-approved, they're probably not going to consider your offer very strongly. So it always helps to get a pre-qualification or a pre-approval ahead of time. Now, there are some people that do make a distinction on that. And again, usually it's just very legal differences, nothing really major as far as we're concerned. But there are some people that say a pre-qualification is where we have not validated the information yet. We've just taken what you've given us online, and we still need to validate everything physically. And then a pre-approval is after we validated everything. So there are some institutions that do it that way. Again, at Georgia Zone, just everyone is pre-qualified or they're not. And there's really not a difference in terminology there, but some realtors and some sellers are very specific about what they want their letter to say. But really, ultimately, as long as you're pre-qualified or pre-approved, either one, you have a lot more buying power. You're able to make a stronger offer, and it helps you buy the home better. Yeah.
I think another thing that's important to try and establish is even finding a mortgage lender. Obviously, Georgia Zone is one. But what are the things that you should look for? What's important when you're considering who to shop your mortgage? Because there's a lot of different ways you can go. There's different ways you can do it. What are the most important things that you would look for?
Yeah, absolutely. There's a million different mortgage lenders out there, right? There's mortgage brokers, there's big banks, there's credit unions, there's all sorts of people. So just whoever ultimately you are comfortable with, I would encourage you to not just look at the rate, because you click on a million different offers and they say we have rates as low as 2% or 2.125 or whatever it might be. Really look into those that have the lowest rates, especially if it's not a company you're familiar with, because a lot of times they're charging you 2 or 3% in discount points to get to that rate. So they're charging you a lot more in fees, but it looks more attractive because the rate on that piece of paper is a lot lower. But ultimately, it's all about how much money you're going to come out of pocket, how much it's going to cost you, as well as getting a combination of a low rate. And so again, at Georgia Zone, obviously, we like to think that as a not-for-profit financial cooperative, which is what a credit union is, we're here to serve our members. We're here to help our members save and give back to our members in the form of lower rates and lower fees. Yeah, obviously, this is Georgia Zone. I would love for you to come work with us, but really just work with someone that you're comfortable with ultimately, and that's going to give you a good combination of low rates as well as low fees. And then also you got to consider the servicing aspect of it as well. Once your loan is completed, I'm kind of jumping ahead a little bit, but once your loan is completed, somebody has to service that loan at that point, right? So if you're comfortable with a company online that you've never heard of before, servicing your loan or selling it off within the first 2 weeks or the first 2 months, and then having it sold again, and then having it sold again, so different companies end up servicing your loan, then that's a risk you take. You go with someone like a Georgia Zone or like an established company that tells you they're not going to sell your servicing. Then again, we handle it here. We work with a mortgage QSO, which is a credit union service organization. We partner with them. All they do is serve credit unions. and they're our partner in the transaction. So if you ever have any problems with your servicing, it stays with us. It stays with Member First Mortgage is the name of it, with Georgia Zone, and we can assist you with that. You can call up your loan officer that did your loan, and they can help you out. So that's some of the bigger things I would look at ultimately.
You brought up something there that I think was something I learned too along the way, especially now with obviously the home buying market has been super accelerated by the low interest rates, but then you see some super low rates. And what I think I learned in this process is if it looks too good to be true, it probably is. And you touched on that with, having to buy down points off a rate. So that's where that could also be misleading, where you can see kind of the headline, but the fine print behind it is pretty significant.
Yeah, absolutely. And a lot of people, when they look at our rates or compare what our rates are to maybe someone else, they think, well, why are your rates so much higher if it's if it's an eighth higher or 1/4% higher than what they're seeing somewhere else? And the fact is, rates change daily. They fluctuate daily. It's not like we have a set rate and it's going to stay that way for a month. It changes. Probably since I've been talking, it's probably changed already. So the good news is they are historically low. So we've been a year or more now of historically low interest rates. So that's the good news, and there's probably a stone's throw worth of difference between all of them out there. But yeah, don't get so hung up on an eighth difference or a quarter difference in rate. Pay attention to the details behind it. Really compare apples with apples as far as if you're gonna pay more to buy that rate down actually, or if you're actually getting that rate at no discount, so you're not paying any extra for it. So yeah, that's a good point, Adam.
So the low interest rates are one thing that's driving this, but as most people probably know, just having your mortgage payments are important. You need to make sure those are affordable, but you also have to make sure you can afford the down payment. And I know there's a lot of questions about how much do you need for a down payment, what percentage does it need to be, does that affect your rate, so on and so forth. So if you can kind of take us through the process here on establishing what your down payment is going to be, what is realistic based on the home that you want to buy.
Sure. There's a misconception out there, especially among millennials, is what I just found at a conference I was recently at, that people, due to lack of financial education growing up, and that's a poor job we've done on our end as far as a financial institution. We need to do better about really teaching our members some of this stuff. But a lot of people think you have to save up 20% before you can buy a house. You got to save up 20% of that home's purchase price or whatever you're going to buy it for before you can get a mortgage loan. And that's simply not true. There's lots of much more affordable options. There's a 5% down conventional program. So literally that's all you got to save up is 5%. And then any closing costs or any settlement costs, which I'm sure we'll talk about later on the back end of this, those also have to be saved in addition to that 5%. Or you can negotiate that with the seller and try to have them pay some of those costs at the closing. Right. So really ultimately, and there's some 3.5% purchase options. There's 3% down options. There's some with 0% down. There's some 100% financing options out there. So really, again, don't get so hung up on having to save up 20% before you buy a home. Are there benefits to saving up 20%? Absolutely. You'll get rid of your private mortgage insurance, your PMI. And that's really the biggest thing. Your rate is going to be very similar. As long as you have good credit, good solid credit that's out there, whether you're putting 5 or 20% down, your rate's going to be in that same ballpark. So really, you're just getting rid of PMI if you save up that 20%. And if you can do that, kudos to you. But ultimately, yeah, there's some options with 0% down, 3%, 3.5%, 5% down. That if you can save up 5%, that's beautiful, because then you can get a conventional loan, and that's probably the best way to go ultimately.
Yeah, in terms of the way that your mortgage is affected by your down payment, how significant is that? I mean, how big of an impact are we talking about in terms of how much you put down relative to what your payments will be?
Sure. The more you put down, obviously, you're going to have a lower loan amount, so you're going to have lower payments. But it's really not that significant of a difference, again, when we're talking about it. The difference between putting 5% and 10% down sometimes is maybe $100 a month, $50 a month. It depends on the loan amount, depends on the loan size. So again, I would encourage you to work with your loan officer. You have online tools available to you where you can look at a rate calculator and kind of calculate what your payments are going to be, and see the real dollars and cents difference based on how much you put down. But a lot of times it's a lot less than people would think. I mean, if we're talking about a 30-year financing, that's a long period of time. Even a 15-year financing, that's still a long period of time. So it's not a huge significant difference. A lot of times the difference between 5% down, 10% down as far as what it really makes in your payments. So as long as you can get a payment that your budget is comfortable with, that you can afford, obviously, we don't want anyone being uncomfortable with what they're paying. Then yeah, I would encourage you to put down as little money as possible so you can have that money for other things, for emergencies, for savings, for vacation, for whatever. Yeah.
If you're just joining us, we are talking all things home buying with Aaron Craig from Georgia Zone. If you have any questions or comments, you can drop them right below in the comments section, and we will address those as we move through this conversation here today. You mentioned, Aaron, during that last stretch, the length of the loan. Now, I think most of the time, again, what I'm used to seeing is you see 15-year, you see 30-year. I mean, obviously, there's a difference in length there. It's pretty bold-faced. But what's the tangible impact of choosing one or the other, and which one makes sense for whom, I guess?
Sure. It's going to really depend on your personal situation and your budget. Majority of people, when they're buying a house, are just going to gravitate toward a 30-year loan. That's obviously going to give you the lowest payment possible. And then we know that bad things happen to good people along the way. So if something bad happens, we have another pandemic, somebody loses a job, anything, you're only obligated to that lower payment. So I would probably encourage you to go look at a 30-year mortgage. And then if you really didn't want to keep it out there 30 years, you can pay more on it, and you can pay more toward it to get it paid down faster. But if you do lock yourself into a 10-year or a 15-year or a 20-year term, you know, the rate might be a little bit lower for you, but then you're obligated to that higher payment. So again, if it's something you're comfortable with, then feel free to go with a shorter term. But if it's ultimately, you know, not that big of a difference, and I would encourage you to run the numbers again to see the real tangible difference, then most people go with the 30-year fixed rate term if that's in their budget. Yeah.
This is a question that we had, was in terms of how do I'm sorry, this is, yeah, how does your mortgage come together? What is included in that mortgage payment? And I guess it differs, right, depending on how you choose to do it.
Yeah, definitely. Included in your mortgage payment, and again, this is a very high level overview of it. There's principal and interest. So principal, if you paid purely a principal payment, and your mortgage, say you owed $100,000, you paid $1,000 worth of principal, then you're only going to owe $99,000 when that's over. You've paid $1,000 toward what you've actually owed. Interest obviously is your interest rate that you do have on that piece of paper translates to real interest dollars on the loan. So if you paid, say half of it goes to interest ultimately, just again, hypothetical, not a specific situation, $500 goes to principal, $500 goes to interest. So some people are wondering, well, I paid $1,000. Why didn't my balance come down $1,000? It's because half of that went to interest, or a portion of that went to interest. So principal and interest are what make up a mortgage payment. And then escrow, which a lot of people have confusion about. And a lot of very smart people have confusion about escrow. And I did too, honestly, going into the business. It's a confusing concept, but ultimately escrow is just taking your homeowner's insurance and taking your taxes, your property taxes that are due, as well as any mortgage insurance you might have, and sometimes homeowners association dues, but those things, and you're just paying, say that over the course of the year, that whole total amount was $10,000 that you would have paid for all that. It's just breaking it down into monthly payments and then holding it in an escrow account for you throughout the year. So it builds up your escrow account. That way, when those property taxes are due annually, usually, then the money is there for the company to go ahead and make that payment for you. So that's really all it is. You're not paying any extra money. It's money you would have paid anyway. It's just you're paying it as you go as part of your mortgage payment. So say your mortgage payment was $1,000. Maybe now your monthly mortgage payment is $1,500, and $500 of that goes into your escrow account. So then again, when it comes time for all those things to be due, they will automatically be paid for you. You don't have to worry about it. So escrow ultimately is a good thing. It's a scary word and a lot of people are scared of it, but it's 100% fine. It's you're not paying any more money. It's money you would have paid anyway. Usually it's just they're holding it for you in an escrow account to make those payments. And if you are at higher than 80% loan to value, meaning you did not put 20% down, which is 100% fine, then escrow is pretty much mandatory. So there's some people that want to keep it separate, want to pay it separate. That's 100% fine in certain situations. But again, it would have to be below that 80% threshold for you to be able to do that in most cases.
So it's funny, I mentioned right off the top that I'm going through a lot of this stuff for the first time as well. A few weeks ago, I got my yearly property taxes from DeKalb County. And obviously you open the thing up and you see, a few $1,000s, and that just puts a real damper on your day. But that frown was turned upside down when I found out that that was actually already paid for through my escrow. So I was very dejected, but then I was elated, right? We had the full range of emotions there. But again, that's something that if you haven't owned a home before, you wouldn't know. I'm sure someone told me at some point and I didn't properly process it, but that's just another thing that if you haven't done it, you just don't know.
And you must not have used Georgia Zone for your loan, Adam, because our loan officers tend to do a good job of explaining that before closing, so everyone understands it. But so you don't.
I signed so many documents I can't even remember. I signed so many documents.
Yeah, understandable.
I think I signed my life rights away to like Disney to make a movie about me. I don't even know. Okay, so we've established that there's a lot of elements to this that can change, right? So if I'm trying to make a decision about what route to go in terms of, we're talking, okay, do I choose, how much do I put down? How much do I put, do I want to escrow? Like, how would I make these decisions? If you were advising me, if I come to you, how do I make those decisions?
Well, and that's exactly it. You need someone to advise you in that. So that's where I would encourage you to pick up the phone, call a loan officer. All 8 of our loan officers are listed on the website. You can call them at any time, or just go ahead and apply. And within a day, someone's going to call you back, unless we just have a really, really high volume time, in which case it might be the next day. But yeah, work with a loan officer. The loan officer will walk you through that. The loan officer will help you out in determining what's the best product for you, what's the best fit for your budget, how much you're looking at, just to make you comfortable with everything. And they will help walk you through that. That's not a decision that a lot of people just need to make on their own. They need to have a little guidance, and that's okay. So again, we have mortgage loan officers, 8 of them, very experienced for the most part. We got a couple newer ones, but the other 6 are very, very experienced, and the newer ones have caught on great. So any one of them can advise you on the best route to take, the best path to take, to save you some money, help you buy a house, get you in the best loan product, to ultimately fit your budget and help you out down the road. Not just focus on the here and now, but look down the road as well. And they can absolutely do that. So I would encourage you, again, just to apply online, get that started, or pick up the phone and call. And we're happy to have a mortgage loan officer contact you and help walk you through it.
If you're just joining us, we are talking to Aaron Craig about buying a home and giving us all the expertise that we need and that you need to make those decisions. We do want you to put any questions you have in the comments section below. We did get a question from Allison. Allison wants to know, she's hoping to get some information about the new construction loan that Georgia Zone is offering.
That's good, Alice. And you must be ahead of the curve, because we literally just started offering that in the last week. So
Allison is ready to Allison wants her home and she wants it now.
Alice is on top of it. That is still a work in progress, honestly, Alice. We have the product we have set in place now is basically an 80% loan to value product for construction. That does include the land. So a lot of people already own the land and they're just waiting to get their plans and everything drawn up. So the land that you own can be included in that 20% down, essentially, as far as the construction lending goes. But the product itself is interest only up front. So for the first, houses usually take 6 to 12 months to build from start to finish. So throughout that process, you're only going to pay for what amount you've drawn out, what the builder has required. And there's 4 or 5 draws throughout the process. And there's home inspections along the way to make sure the builder's staying on track and they're not wasting your money and all those kind of things. So, but it's interest only for that first 6 to 12 months until the house is complete. And then at the end of the the house being complete, you get a certificate of occupancy, and you make sure the appraiser comes back out, says, yes, it's complete, we're good to go. At that point, we would modify your loan and put it into a regular principal and interest payment. And the beauty of all that, though, is there's only one time close. So we're not doing two different closings and two different sets of closing costs and two different, all that kind of stuff. It's just a one-time close. So one-time close construction loan. I think I've given basically the high-level overview of it. We're working on trying to get a 90% product out there. We're not live with that quite yet. So we're working on that one still. But as of right now, what we're live with is an 80% product, which is pretty common out there. And so, yeah, if you have any other questions, we'd love to talk with you about it.
I mentioned earlier, the Zillow warriors. And one thing I think is misleading when you're looking at houses online and you're seeing you're looking at the big ticket price, but there are other things to consider. Among them, and I can speak to this again, being in a townhouse, you have your HOAs that can add a considerable amount to your monthly payments. You also have to consider the larger the house, the more utilities. Is there gas? Is there all these things? How would you recommend people help account for the other? I guess you could say they're like not hidden fees, but they're things that wouldn't be in that price tag that are still necessary and you're going to have to pay on a monthly basis.
Yeah, and that all comes back to educating yourself and making sure that you're comfortable with the payment that you're looking at with everything included. So you mentioned HOA fees. There's some places that don't have an HOA fee at all. There's some places that have $100 HOA fee for the whole year. And then there's some places that have $2,000 a month HOA fee. So that can make a huge, huge difference as far as your homeowners association dues. So definitely that's something to consider. Higher utilities, if you have a bigger place, the price tag might be in your budget, but you do have to consider the higher utilities, like Adam said. So there are some hidden costs in there. A good rule of thumb, honestly, I've heard different ways. I've heard whatever you're making on a monthly basis. So your gross monthly payment with taxes included and everything, or gross monthly income, I apologize, with taxes included and everything, take 30% of that, and that should be your highest maximum amount of the mortgage payment that you make for your budget. And again, that's probably on the high side. I've also heard it as low as 25%. I've also heard the 28% rule. So again, just know somewhere between that 25 to 30% range, that's probably about the max range that you need to be at as far as your monthly mortgage payment. So again, 25 to 30% of what your monthly gross income is, that should be what your monthly mortgage payment should be on the high side. If you stick to closer to the 25% or less, that's more budget friendly, obviously. That's going to give you a little bit more wiggle room with some unexpected expenses or some unexpected costs that you didn't factor in. You stick to that 30% or go a little bit higher even, which I would not encourage you to do. But some people do that and they just want to get the most house they can get. Then just know there are other expenses that come along with it. And also, as everybody knows, I think, property taxes, they don't tend to just stay still. Property taxes tend to go up every year or every other year. Here lately, I think mine's gone up all 3 years that I've lived in this house. So
might have gone up while we're talking.
There you go. It's probably going out right this second.
It's happening right now.
But so just factor that in, that property taxes could have a large swing going up. Property values, as you probably know, if you're looking at buying a house, have really appreciated in the last really 6 months, but last year for sure. But the last 6 months, they've really shot up, especially in and around Atlanta and in other areas as well. So right now, you're kind of buying things at a premium. It's a really a seller's market. There's not a lot of inventory out there. So when one comes on the market, there's 20, 30 offers on it. So really need to make your offer stand out and really consider, do I really want to pay that much at that high of a premium right this second for that home, or maybe look at slightly smaller ones for your budget.
I want to fast forward in the process a little bit. We've talked about a lot of the front end, and now I'm curious if we sort of move through we found a house, we've made an offer, and now we have a deal, and now we're in the closing process. The closing is kind of a generic word, and it can mean different things depending on who you're working with, who your lender is. Can you tell us a little bit about the closing process once you have an agreement to purchase a home?
Sure. Yeah, once you get a sales agreement or a purchase agreement in place, then going forward from that point, everything really gets ramped up and moves quickly. Because immediately we want to get that appraisal ordered. You probably as the buyer will probably want to get a home inspection done on the home. And again, that's optional. That's up to you. If you get a home inspection done, I would recommend it. Just so that way you have peace of mind in making this large investment that you're making, to pay somebody and have them check it out, just to make sure there's nothing hidden you weren't aware of. But appraisers just go out and simply give an opinion of what they think the house appraises for, what it's worth, what somebody's going to pay for it, and is it actually worth that. But we see large discrepancies on appraisals, and we order our appraisals through an AMC, an appraisal management company, so that we don't send all of our business to one guy or influence him in any way. It keeps things impartial, and so the appraisal management company shops it around to various appraisers, and they come out and they're unbiased and they give their opinion of what they think it's worth. So that's all we're looking for as the lender is knowing what it's worth. As far as some of the specifics of some hidden costs you might have, that's more what a home inspection is going to find for you, unless there's just something blatantly obvious, which the appraiser would note. If there's rotted wood or anything like that, the appraiser would notate that. But again, we want to jump on that quickly because appraisals are taking a couple weeks to get in now, and there's usually appraisal contingency dates within your contract that the sellers have worked. And let me backtrack real quick too, Adam. I want to put a plug in for working with a realtor, if I have not done that, a realtor. As someone buying a home, if you work with a realtor, the realtor is really your advocate in that process. Like, they are there to help you out, and you are actually not paying them a dime. It is the sellers that end up paying the realtor that you're working with. So again, I would strongly encourage you to work with a realtor. They can help you, be in your corner, advise you on things, just like your loan officer and the staff at Georgia Zone could do as well along the way. So it's kind of a big team once you work with a realtor, work with a lender, all that kind of stuff, your processor, your underwriter, everybody's in together to try to help you out. But a realtor can help you walk through that process a little easier, advise you on it. And again, it doesn't really cost you anything more ultimately. The sellers are going to be the ones that pay those costs, and they've probably listed that house with a realtor already. So really that other realtor is splitting their commission with the one that's helping you out. So let me put a plug in for that, because they will be your advocate and your partner throughout the process as well. So again, once you're under contract, we'd order the appraisal pretty quick. We'd get all the title work in pretty quick. And the title work is just essentially saying, it's an attorney usually that validates it, or a title company validating that there are no liens or anything on the property. The property is clear. That way, when you buy it, there's no issues later down the road. You can get title insurance on it. And we get the title work, we get the appraisal, the flood determination. There are some houses that are in a flood zone randomly. You may or may not know that because it might not look like it. But we get a flood determination ordered, all these things. And again, there's no upfront cost to you as the member. All this stuff is behind the scenes. And once that loan closes, it is recouped in the closing costs. Anything that we have incurred, we will, as far as fees go, we'll pay that back and you'll owe that. But up front, the only thing that we really ask you to pay up front is when we're ready to order an appraisal. So the appraisal fee is the only thing that we collect up front. There might be other people that collect various other fees up front, but as far as we're concerned, we only collect that up front. So I did want to say that in case you're thinking, well, I don't have any extra money to spend right now. All we're collecting typically is a $4.95 fee up front when you're ready to order the appraisal. So it costs nothing to apply, nothing to look at it, nothing to get you pre-approved. But once you're under contract, if you're ready to move forward, that's the only thing we'd collect up front.
In terms of a part of the process you were just describing, people probably familiar with the term due diligence. Can you talk about the role that due diligence plays in this process? Again, looking at the timeline from I've made an offer and it's been accepted to the end game of closing. Yeah,
there's due diligence. There's contingency dates within your clause, within your contract. There's typically a contingency date for your appraisal. And then there's typically one for getting the home inspected. And then there's one for closing. So there's really three kind of important dates in there. One to get the house checked out, one to get an appraisal done, and one for financing. So yeah, the due diligence period is you're making your best efforts combined with your lender to get these things done in good faith with in a time frame that works for your sellers. So if the sellers say, hey, we'll allow you 2 weeks or 20 days or whatever it might be to get an appraisal done, and it's usually shorter these days, but it typically takes a couple weeks. So that's something your realtor can help you negotiate. That's something your mortgage loan officer can advise you to help negotiate in making a contract as well. But you really want to try to hit those dates. And if it looks like we're not going to hit those dates, the appraisal is not due back quick enough or something like that, the appraiser got delayed, the appraiser went out of town, you can see how heavily dependent we are on appraisers and the appraisal industry, unfortunately, because that's out of our control. But if it looks like it's going to be past those dates, then work with your realtor, work with your sellers to try to get that extended. As far as financing dates, that's what we really look at Georgia Zone. Like, we don't want to miss a financing date when it's all said and done. So typical start to finish process, used to, it would take roughly 35 or 30 days. Here lately, we've been keeping it to 25 days or less. So about 3.5 weeks is your typical turn time from start to finish. Once you have a purchase agreement to signing documents, closing on your loan. Yeah, you're looking at probably 3.5 week process. Some people will push to do it quicker. And can we do it quicker? Absolutely. We have done it quicker before, but we try to get at least 21 to 25 days, if not a little bit longer, just to make sure there's no issues as far as due diligence goes. You check out the house and there's a problem with it. Again, you just want to always give yourself a little bit more breathing room if possible. And in the state of Georgia too, there's a 7-day period where if you don't close by that date for whatever reason, then automatically it extends an additional 7 days so that the whole process is not blown up if you miss it by 1 day.
Right.
So again, a lot of people don't need to worry so much about that because legally you're covered for an additional week after your financing contingency date after it's supposed to close by. And a lot of people don't know that. So, yeah.
In terms of the length of the closing, are there, other than I want the house by this date, are there benefits, or like, what would be my reason if I'm trying to decide, well, how long should my closing be? Does it give me any benefit to choose a later date or to choose an earlier date? Or is that just about when you want it? Maybe it's tied to when a lease ends at an apartment or something along those lines.
Yeah, it's going to be according to your specific situation as well as the seller, right? Because the seller might have dates that they have to be out by.
Right.
And at some point along the way, once everything is solidified, once the appraisal's back and hey, everything looks good, we're just trying to get the final clear to close, so we're ready to close. At that point, there are moving trucks that get lined up. There are, people having to stay in hotels potentially for a couple days that they've budgeted. So
right.
It does get pretty sticky if it does not close by a specific date sometimes. So again, that's why if as a buyer, I would try to extend it out a little bit if you can. But if you absolutely have to be out of your rental unit by the end of the month and you need to close on the 1st, then we can try to make that happen. So just work with the seller, work with your realtors, and make sure you get a date that works for everybody. It's a good rule of thumb: the more time, the better. Just so everything is not rush, right. And everything is not potential to make mistakes on any front. And so yeah, the more time, the better. But if you can at least allow 3.5 weeks, that'd be 25 days would be great. 25 to 30 days. Used to, all the contracts were written 30 to 45 days in the old days of lending. But now everything's a lot quicker and they're wanting 2 and 3 week closings. And a lot of times it's the seller putting pressure on the buyers. So as the buyer, if they've accepted your offer, try to give a little pushback to that if you're not comfortable with that closing time frame, and try to get it to 3.5 weeks or longer if you can. Yeah.
I want to talk more about closing costs because I think it's a term that people are familiar with, but they don't necessarily know what that entails. What are they? What can you expect to pay in closing costs? And does that depend on the sale price of the home? What are the factors that affect closing costs, just to try and get a better handle of what that means?
Yeah, sure. Closing costs essentially are the fees that we incur in doing the loan. So there's appraisal costs. There are origination costs. Some places charge an application fees. We don't, but some places do. There's credit report fee, flood determination fee. I think I already said the closing fee for the attorney, the title insurance fee. There's all sorts of fees, some small, some big, that based on the size of your loan and everything, it's typically, closing costs are typically between 3 to 5% of what your loan amount is. And again, that's very general terms, but that's typical. If you can get it closer to that 2 or 3%, great. And again, that's something that you can negotiate with sellers to help you pay for. If the sellers sometimes say pay up to 3% of your closing costs, something like that, that's wonderful. Then the sellers end up paying for it. But if you can keep those fees as low as you can get them, 3 things I do want to bring up as far as closing costs goes. There's transfer taxes, and I think that's typically like $1 for every 1,000. So every 1,000 that you're financing. So it's really not a significant cost, but it is typically a few $100s depending on your loan size. There's a residential mortgage fee, and it's like $10. That's not much, but it's just, again, little fees like that add up. One big one, though, is the intangible tax when you're buying a home. And the intangible tax is $3 for every 1,000 that is financed. So if you're financing $100,000, that's $300. Finance $200,000, that's $600, and up from there. So that can be actually a significant cost. And as a credit union, we are exempt from the intangibles tax in the state of Georgia. So we are a state chartered credit union, but even if you're a federally chartered credit union within the state of Georgia, you're exempt from intangible tax. So again, that is just one example of some fees when using a credit union or using Georgia's own, that closing costs that you would save. Just right off the top, we don't have the intangible tax. So again, when you're comparing other offers that might have a little bit lower rate or might have similar closing costs on paper anyway, look for that. Look for the intangibles tax, and look for if they're charging any discount points. Again, origination and discount points. Those are the 2 big fees that can largely vary with lenders. And the discount points, again, are for every 1 point, that's 1% of your loan amount. And that's purely to just buy down your rate. So they can offer a nice low rate on paper, but you're paying 1 or 2 or 3% for that rate. And sometimes you don't know that. So always look at, we get what's called a closing disclosure on the back end before you close, and it's got all the fees identified for you. We have a loan estimate on the front end, and that's, that helps out as well as far as looking at all the fees and the estimated closing costs. But once you get that closing disclosure on the back end, it's a lot more solidified, a lot more exact, and it's always a good idea to check that out. And if you're not comfortable with something, it is not too late ever if you have not signed on the dotted line to switch lenders if needed. And we've had several people come from, I won't name other institutions, but come from other institutions late in their process, and they didn't realize they were paying 2% in discount points. And so they ended up coming to us halfway through the process, and we worked it out for them. So yeah, definitely closing costs. And then settlement costs ultimately are different. When it's all said and done, you have prepaids. So prepaid items are like prepaid taxes or prepaid insurance. That's money you're going to have to be paying anyway. So it's really not a fee. It's really not a cost. It is a cost, but it's really not a fee. So those other things I talked about were closing costs, closing fees, but then settlement costs, prepaid insurance, prepaid taxes. There's a certain amount of insurance, like 6 months, 9 months, whatever the case might be, as well as taxes and insurance that you have to prepay. So ultimately you would have paid that anyway, but this is just collecting up front, but that does add to your total settlement costs. So again, total cost, you should be looking at maybe between 3, 4, or 5% somewhere as far as the amount that you're financing on your loan. And as low as you can get some of those fees, some of those actual closing costs, the better for you.
Again, we encourage your questions. If you're watching this live, you can put them below in the comments section. If you're watching this after the fact, you can still ask your questions below, and the Georgia Zone social team will get back to you. We got a question from Gwendolyn. Gwendolyn wants to know, in terms of closing costs, do you also pay closing costs on a VA loan?
Yeah, on VA loans, there are closing costs associated with any loan you're going to do ultimately, but there are definite benefits to doing VA loans. So if you qualify for a VA loan, then I would strongly encourage you to contact us and have a loan officer walk you through that. VA loans are great things that they put in place for former military or current military. So yeah, there's absolute benefits to doing a VA loan if you qualify for them. And one of our loan officers can walk you through that. So we'd love to talk with you more about it, Gwendolyn. Yeah.
I mentioned this a little while ago, but in terms of if we've gone through the process, right? We've closed, we're here. What happens next? What are things that you should know after you close on a home that are still going to be important benchmarks financially moving forward?
The very first thing you should know, if this is your primary residence, and again, I don't think I really covered this, but we offer FHA loans, we offer VA loans, we offer USDA loans, we offer conventional loans, we offer jumbo loans. So we offer the full gamut. But if this is, we offer second homes and investment homes as well. So what I'm getting at is if this is your primary residence, then the first thing you need to know is soon after you close, within the first few weeks, be sure to get to your county courthouse or apply online. I think I did it online back when I bought my house, and apply for your homestead exemption. If this is your primary residence, this is your main place that your main residence, apply for the homestead exemption. And that way that will greatly reduce the amount of taxes that you pay, the amount of property taxes. If you do not file for that in a timely manner, then your taxes for the next year anyway will be significantly higher, and you're going to have to wait till that next year rolls around before you can get it down again. So, so again, within the first couple of weeks, 2-3 weeks, be sure to file for your homestead exemption. That's the biggest thing. If it's your primary residence, that's a huge thing we remind our folks to do, because we can't do that for you. Then the second thing, just something to know, is you will get flooded with all sorts of mail when you first close on your house. And I don't know if you've seen it or not, Adam.
I still get it. Yeah, I still get it almost a year later.
I still get it 2.5 years later, and the majority of it is not from Georgia Zone. Some of them do a really good job of making it look like it's from Georgia Zone, but you read the fine print, it's not from Georgia Zone. They're just from random companies. We're not selling your information to people left and right, and that's what people get upset about. And they're like, "You obviously sold my information, or I wouldn't get flooded with mail." That's not the case. It's public record when you buy a house. It's out there. And so there's companies that check those public records and have automated services that check those public records. So when you buy a house, you're going to get flooded with mail after you're in for home warranties. They want you to buy a home warranty, and for refinancing already, like immediately. And then definitely within 6 months, a year, 2.5 years later, I've been in my house 2.5 years now, and I still get all sorts of home warranty and refinancing stuff. And it all looks like it comes from Georgia Zone.
Yeah.
None of it usually is from Georgia Zone. So
it'll even have the name. I mean, it'll probably say Georgia Zone on it, and you have to really read the fine print where it says that it's not affiliated in any way. But that can be very misleading. So what should people do to verify if the information they're getting in the mail is what it claims to be?
Well, first off, read the fine print, which a lot of people skip that. They just look at it'll say like regarding or RE.
Yeah.
Georgia Zone Credit Union loan.
Open immediately. Like very important.
So then you open it up and you find out, oh, it's just something wanting me to buy a home warranty. Oh, it's just something wanting me to refinance. And then at the very bottom in very small print, it'll say, we are not affiliated with Georgia Zone Credit Union. So if you don't see that, I have seen one that didn't say that, but I knew it wasn't from us. But if you ever have a question about anything, feel free to call our member service center. They'll get with the mortgage department. Feel free to call the mortgage department. And we're happy to verify if we sent anything out or not. 99% of the time, it's probably not us. And that if it absolutely looks like it's from us, you'll know it's from us. It'll have our signature colors. It'll have our logo. You'll know it's from us or not. But a telltale sign is that logo. People that are not associated with us don't ever put our logo on stuff. They just put our name on stuff. So that is, and it's usually black and white. It's usually not color, but that's not a hard and fast rule. So again, just want to prepare people for that when you do buy a house, because a lot of people don't understand that, and you're just going to get flooded with mail, and it just is what it is. There's not a great way around that. The third thing and the final thing, as far as after you buy a house, is you'll get a statement in the mail probably 10-15 days before your payment is actually due. If you finance with Georgia Zone, your payment should be in your online banking. Your payment information should be in your online banking already. So you can sign up for e-statements. You can, I don't like personally getting a statement mailed to me in the mail anymore. So I signed up for e-statements. I just pay it online through my online banking. It's a convenience, and it's less paperwork and less physical mail that you get. So just know that you will get a statement, though, at least for your first few payments, unless you don't want them, in which case you can sign up for e-statements.
Another question that came to us from the comments section: for higher loan amounts, do I have to get a jumbo loan? And what is a jumbo loan? I mean, it sounds fun, jumbo, right? Tell us more about a jumbo loan.
Jumbo loan does sound fun, and it is fun because you're getting a bigger house, right? And or a nicer house or something. But a jumbo loan amount typically is anything over, if you're financing over $548,250, and that usually goes up every single year slightly. So again,
that's
right
an incredibly
now,
specific amount of. Is there any change on that number too?
There probably is, and I probably just don't know it. So for legal reasons, I don't know. But 548, 250 is the current jumbo amount, and probably again it will probably change in 2022. But if you have a loan amount finance that is over that amount, yes, it's going to have to be a jumbo loan. Now there are, I guess there's probably some government sponsored loans that you could look into, but as far as meeting your conforming limits with Fannie Mae and Freddie Mac, it would have to be under that jumbo limit. Now, as far as jumbo loans go, we do those in-house. So that's what we call a portfolio loan. So it would stay in portfolio with Georgia Zone. It would not get sold off to Fannie Mae or Freddie Mac. And again, as a reminder, I don't want to get too into the weeds with this, but even if we sell a loan to Fannie Mae or Freddie Mac, that just means we're selling that loan specifically. The servicing rights still stay with Georgia Zone. So again, if we sell to Fannie Mae, Freddie Mac, your loan is still with us. It still stays with us. It's not going somewhere else to have someone else service it for you. You can still call us and everything. I just want to make that clear. We retain our servicing rights, except on some VA loans. VA would be the one exception to that rule. So I do want to clarify that if anybody is looking at a VA. Those are typically sold servicing released for a myriad of reasons, but we can still absolutely help you out with a VA loan, and we talk you through that. But yeah, jumbo loans are just larger loan amounts, and we'd finance it on our portfolio, keep it on our books, and the rates are pretty solid on those. Ultimately, a lot of people do 15-year shorter terms on those because they have more money that they're working with. But we have 30-year options on those as well if people need 30-year financing.
Yeah, there's all sorts of questions that pop up. You're like, wait, what does this even mean? How is this different from the other thing I just heard about? Yeah, so there's obviously a lot of questions, which is why I would encourage you to ask and to call, to reach out. We just have a few more minutes here. A couple more things I wanted to get to before we wrap up. You mentioned it, I think, a couple times earlier. Refinancing. That's a very hot topic now with the low interest rates. You've probably heard about people refinancing left and right. Tell us about refinancing. What does it mean? What does it entail? And when does it make sense for someone to look at as an option?
Yeah, refinancing, if you're a current homeowner, and I know this is a home buying webinar, but if you're a current homeowner and you have not refinanced within the last 2 years, then I would strongly encourage you to look into that while rates have stayed low. The general rule of thumb is if you can save anywhere from 0.5% to 0.75 or more on your interest rate, it's probably worth your while to refinance. Now, again, that's a very general rule, but if you can save 0.5% to 0.75% on your rate, it's probably a good idea to refinance. There are many, many reasons to refinance, and some people it's purely to get their interest rate down, like we just talked about. For some people, it's to get their payments down. So they want to refinance regardless of how long they have left. They want to refinance it out to another 30-year term, just to get their payments down a couple $100 or $400 or $500, whatever it might be. For some people, they want a shorter term, so they want to get it paid off quicker. They recognize it's going to be a lower interest rate, so they maybe they have 27 years left on their mortgage, and they refinance to a 15-year term. And with lower interest rates like they are now, maybe their payment is really not that much significantly more than what they're paying already, and they knocked off 12 years on their mortgage. So yeah, if you can save interest rate, save some payment, depending on your situation, lower your term, shorten your term. A lot of people have an adjustable rate mortgage that maybe was fixed for 5 years or 7 years or something like that, or 3 years, and they want to get rid of that and switch to a fixed rate mortgage. That's another reason to refinance. A lot of people, since the values have appreciated, are cashing in on some of their equity. So they're doing a cash out refinance. So they're cashing in on lower interest rates, but then they're also pulling out some money for a home project or pulling out some money for any reason, and cashing in on that equity. So a cash out refinance is another reason. And then the last reason that I typically see on refinances is to get rid of your private mortgage insurance, get rid of your PMI. So really those 5 or 6 reasons. Rates are historically low right now. So if you're a homeowner, you have not looked into refinancing within the last 2 years, I would strongly encourage you to look into it for any of those reasons. And it could save you thousands and thousands of dollars ultimately in the long run. So that's a great question, whoever asked that, Adam. Yeah.
If I wanted to refinance, would I do the same? Is it the same process? Do I go to you? Do I go to someone else? How would I initiate that?
Yeah, refinance is the same process. Just go on our website. You can apply for a loan. There's an apply now button, georgiasown.org. And then I think you click personal and borrow and then mortgage. If you want to scroll down to the bottom of the page, there's 7 or 8. I think there's 8 listed on there officially, mortgage loan officers with their pictures on there. You can pick a friendly face or just if you're familiar with one of them, do whatever you want to do. They're all good. But yeah, same process. You just apply online, and within a day or two, someone will get with you. Now, on the refinances, those do typically take a little longer than a purchase loan. So do not think that within 3 weeks we're getting your refinance pushed through and it's done. Those take more like 45 days. So typically about a 45-day process from start to finish when you apply to when it's finished. Just because there's a little less sense of urgency. You're not dealing with realtors. You're not dealing with attorneys. You are dealing with attorneys. You're not dealing with sellers. And selling realtors. And those are the pushy ones typically. So again, refinances do take a little bit longer, but it's the same exact process, same documentation needed. When it's all said and done, we'd still need to get an appraisal unless you get a property inspection waiver. And you absolutely can get approved to have an appraisal waived if your situation is good enough. If you've got great credit, your loan to value is super low. There's many different scenarios where you can get an appraisal waiver. Then we wouldn't even have to get an appraisal done. And then again, that cuts out that $500 expense, $495 or whatever it was, and cuts out probably a couple weeks in the process. So same process. I would strongly encourage you all to look into that if you haven't refinanced in the last couple of years.
Last question that I have for you, it's probably the logical place to end this conversation, but let's say that I've watched this webinar. This is already something I've been interested in, and I want to move forward. What would you say to someone as to, again, why they should come to Georgia's Own for this, and what Georgia's Own can provide as a lender, as opposed to somebody else, one of the big banks, a broker, et cetera?
Yeah, and I think I've touched on this a little bit already, but as a
bring it home,
bring it on home, bring it full circle. As a credit union, we're a not-for-profit financial cooperative. We're not a nonprofit. We are not a charity, but we are a not-for-profit financial cooperative here to serve our members. And we have 200,000 plus members. We've been around for 87 years, very strong financial institution that is here to serve our members. And as a member, you're also an owner of the credit union. So we're here to serve you as an owner. We're not here to serve shareholders and appease shareholders. So Georgia's Own's here to serve our members. We retain servicing on our loans. So again, you work with us, the loan is going to be with Georgia's Own. You'll have it in your Georgia's Own banking. It's not going to get sold off 6 different times to various companies, and it's a different company every month that's going to service you. There's no intangible taxes with a credit union. So again, that's a cost savings to you in buying a home. And then the last thing, which I have not touched on, Adam, and I'm remiss that I didn't at this point, we have a home buying assistance program, and you can read briefly about it online on the same page, georgiasown.org, under the mortgage section. And if you're working with one of our specific realtors that we have partnered with, then you can be eligible to get 20% back of their realtor commission that they would get paid after you close your loan. You're eligible to get 20% of that back just in cash. You just get a nice check mailed to you within 30 or 60 days, whatever the time frame is. And that's always very helpful in buying a new home, because you want a new couch or a new fridge or something is going to come up that you want. So we do have a what's called a home buying assistance program where you can get some money back if you work with one of our preferred realtors. And again, Georgia's Own, I've been here 2.5 years now. It's been a great company to work with. Our officers are all very experienced, very knowledgeable, very nice, and we're here to serve you. We want to help you out, get you in the loan that best serves your needs, and get you in that new home. So anything we can do to help out, apply online, call a loan officer. We'd love to help you. And thank you. Thank you for being one of Georgia's Own.
I can't wrap it up any better than that. Again, everything we cover here, You can go back and watch this on archive. If there's a certain section you want to hear again to make sure you got all the details. If you have questions, follow-up questions that we haven't addressed, you can put those in the comments below as you watch this, and someone will get back to you. And again, if you're ready to go, if the time is right, go to georgiazone.org. Or is there a specific number they should call to get to the mortgage department?
If they call the generic number, the 1-800 or 1-866 number, I think it's option 2 for loans, and then the next prompt will be like option 1 for a mortgage loan. But yeah, just call the main number. They'll get you where you need to be.
And again, if you have more questions, you can obviously interact right here on the Georgia Zone Facebook page, and they will get you to the right person. Aaron, thank you so much for this. Thank you to Will for helping us on the back end, getting all the questions and the comments in. And thanks to everyone out there for watching. And if this is the beginning of your home buying journey, we hope it goes smoothly, and we wish you the best of luck.
Thanks, Adam. Appreciate it. Thanks, everybody.